Hello, mortgage fans. So we're back for another market update, and this with me, I have a guest. I have lovely Joanna with me. How are you?
I'm very well, thank you. And you?
I'm good. I'm good. We're sort of quite sadly inside on a very sunny day, so hopefully we get outside after this. Weather's been absolutely amazing recently, which is quite
It
nice for this
does.
country.
It's beautiful.
Cool. So, what we're going to talking about sort of rays of sunshine. We're going to hopefully bring some light to people's lives because we're going to talk about first-time buyers today. That's specifically what we're going to talk through. So, what I thought we'd do is I'll do an introduction for Jo. She can tell you a bit more about herself. Then we'll cover off 4 of the most commonly asked questions by first-time buyers, and then to bring it all to life, Jo's going to talk us through a recent case study and just sort of show how this sort of works in practice. So, that's what we're going to do today. So, Jo, over to you. So, why don't you tell us a little bit about yourself, about your background and your time with us?
Yeah, of course. So, yeah, I've been in the mortgage industry since 2014. So I started as a case manager and then as a pair planner, and then I joined Rose Capital in 2019, and this is when I started advising. So I've been advising for like around 3 years now.
Cool. Yeah, good solid background. A lady after my own heart, because I did the same thing. You know, sort of you start doing the back office functions, you get qualified, you become an advisor, and I think you just learn so much coming through that route. And so yeah, really the way I like doing things myself as well. And also I feel for you as well. Sort of just thinking there is that you learned to break through lockdown, which
That's true.
wasn't
That was
easy.
challenging.
So credit to you. You've not had it easy, and you've come out of it smiling, which is always good as well. So that's a bit about Jo for you. So Jo, should we dive into these questions then? So these are sort of the most commonly asked questions in this area, and the very first one, fairly straightforward. Who qualifies as a first-time buyer?
Oh, right. So, as a first-time buyer is someone who has never owned a property. So yeah, any first purchase, then that's the one who is a first-time buyer.
Absolutely.
It really is. Exactly.
And I think sort of maybe what that question alludes to a little bit is that perhaps people think first-time buyers are treated differently by banks. Do you find that's the case?
Well, it's not just that, it's that first-time buyers have few benefits. So when it comes to benefits, as a first-time buyer, first of all, you pay less stamp duty. So as a first-time buyer, you will not pay you will pay 0 stamp duty up to, if the purchase price is up to 300,000. But then if the purchase price is over 300,000, then yes, of course, you will pay a small percentage stamp duty. So that's one first benefit. Then the second benefit is that in general, the government, they offer different schemes when it comes to first-time buyers. So one of the schemes is the Help to Buy scheme and also shared ownership, which means if you were to buy through a Help to Buy scheme, then as a first-time buyer, you are required to put at least 5% deposit, which is great. And also this usually happens, you can go through the Help to Buy scheme if your income is not enough in order to borrow the required loan amount. So what the Help to Buy scheme is and how it works. So if, for example, if you were to buy a property in London, then the government will top up your loan up to 40% of the purchase price. And then the rest will be a loan, a small loan from the lender, and of course, as I said, you will have to put at least 5% deposit. But if you want to put more deposit, then you're welcome to do so.
No, I think it's a really good point. I think many sort of people don't appreciate the stamp duty thing, which is quite a big saving. You know, we're sort of based in London, so we tend to sort of help clients in London and the South East. So any sort of saving is appreciated. And yeah, you're absolutely bang on. I think, you know, if you can't get sort of like a conventional mortgage, yeah, the Help to Buy shared ownership stuff, really, really helpful getting people on the market for the first time. I mean, home movers qualify for that as well, but you're absolutely right. I think for a lot of people, that's often sometimes the only way to get on board because it's just so brutally expensive. So I think you've explained that fantastically. And the next question is, how much deposit does a first-time buyer need?
So as a first-time buyer, you are required to put at least 5% deposit, which means most lenders would offer products up to 95% loan to value.
Cool, I've got it. And again, I think a lot of lenders seem to be easing up in this area as well. I think some banks got up to about £1 million purchase price with just a 5% deposit as well. So not a lot of banks do that, but there are some that go right up that high, which I don't think many people sort of understand or realise.
Yeah, that's true. That's true. Yeah, as you said, not many lenders offer this, but of course there are a few options out there.
Cool. And I think, again, sort of just beefing this up a little bit on the deposit level, again, the good thing for first-time buyers, they're not sort of treated differently or worse, if you see what I mean. So I think in my experience, and I'm not sure if this backs up yours as well, Joe, is that first-time buyers can get as bigger, if not bigger, mortgage than any other borrower. So you're not disadvantaged. And as you say, there's a lot of incentive to try and help people get on the market in the first place.
Yes, that's true. That's true.
Cool. The next question that we sort of answered actually is what benefits do a first-time buyer get? So I think we've already touched on that with sort of stamp duty, the schemes you've mentioned there. I think you've explained that fantastically well. The next one's gonna be a really difficult question to answer. What is the average age of a first-time buyer?
Right. So usually I would say it's around over 30. The average, even though like lately I've seen like quite young couples on their like 25, 26-year-old looking to buy their first property, but I would say that the average age is over 30.
Yeah, no, I'd agree. I think I saw some government stats on it. It does move around in time because it depends on what the market's like. So the stronger the market, the older the first-time buyer. I think through lockdown it went up to about 38, seems to ring a bell, but I think it's come down to about 36 as an average. So yeah, we sort of talked about first-time buyers. You sort of think of young people. It's not really. You know, we're dealing with a lot of families often, and it's just the first time they're buying.
Being over 30 is not old.
It's not, Joe. You wear it a lot better than me, to be fair.
Yeah, we're still young.
You're absolutely right. Well, on that note, that takes us beautifully into your case study. So, do you want to talk us through a recent time you helped some first-time buyers? We'll talk about that in a bit more detail.
Of course, yeah. So so I helped a lovely couple. So they were looking to buy the first property. She's employed. She had gross basic income, which was great. But then applicant 2, he is self-employed. So he's a musician actually, and during COVID, as we know, most of like self-employed, and when it comes to specific jobs, he didn't have good income during the COVID period. So his latest SF302 was showing a much lower income than what the previous year was. So we needed, as we know, most lenders would take, if the latest year the income is lower, then they would work based on the lowest income. So I had to find a lender who would take an average of the last 2 years because his previous year was quite good. So, and I managed, of course, to find a lender who was able to take an average of the last 2 years' income, which means that we managed to boost the borrowing amount. The applicants, they were really happy because they were expecting to borrow much less than what the lender offered. The product, we applied for a 5-year fixed rate at 80% loan to value, which means they had to put down only 20% deposit, and the rate was 1.99% 5-year fixed.
Wow, done a good job there.
Yeah.
as we're experiencing, mortgage rates are going up literally on a weekly basis at the minute. So deals that cheaper becoming a bit of a distant memory. But I think, there's a number of things you've touched on there. I think the big one that sort of jumps out at me is the COVID period, because although sort of like, we've almost moved on from COVID now, there's no restrictions and life's moved on. In the mortgage world, that's going to be around for a few years yet, because as you say, banks look at your average earnings over a sort of 2 or 3 year period, typically, so for some people, they're all back into COVID. So I think it's really, really important to understand that if you're not getting the borrowing you want to get to, please, God, do talk to one of us, because we know how to present things to a bank. And as you say, you can either take an average or the most recent or whatever, but we find ways of positioning it to get the lending that you want. And I think that's a really, really valuable point. Self-employed in itself is quite complicated. That's probably quite a long conversation to have, but
it's a different subject.
yeah, exactly. You mentioned the SA 302 there. So just for curiosity, how were they set up? Was it sort of a limited company director? Were they a sole trader? What was their actual setup? I'm just curious.
So he is a sole trader.
Okay, got you. Because yeah, I think what some people understand as well, like for a sole trader, it's fairly easy to prove their income because your accounts or your SA 302. So for anyone who's not big into their tax world, SA 302 is the self-assessment return from the HMRC to prove your income. So that's why banks really like that document. As brokers, we love that document because it actually breaks down your income really neatly. So if you have multiple income, self-employed, that's a really good document. But some of the banks will work on accountants references, so we tend to find the route that works best. But I think that was sort of worth touching there, really. But it sounds like you did a fantastic job with those guys. So no wonder so they're all moved in and all happy now.
They moved in, they're all happy, they've sent pictures holding their keys. And
again, it's probably one of the reasons why I've stuck at this job so long. You're genuinely helping people, and it's really rewarding. You know, everyone remembers the first property you buy. Everyone does. And if we can be part of making that happen for someone, it's really, really cool place to be for us for a living, really.
That's true. That's true. That's why we're here.
Exactly. So cool. So I think you've described all that stuff really well, Joe. So I think if anyone is in this area looking to buy for the first time, you know, obviously Joe would love to help you. So you know, her details all on the website. So please get in contact. And if not Joe, any one of the team or indeed myself would love to help. So next time out, we'll go through some other things in more detail. So hope to hear from you soon.
Thank you.